on Business Incorporated today. Zimbabwe's business activity hit by a nationwide power outage. In Botswana resumes beef exports from areas free from foot and mouth outbreak. And Ghana opens tourism and cultural hub in New York. Hello and welcome to the program. I'm Will Ibang. Let's start with markets first. From African continent in Nigeria, the NGX is not looking bad at intraday. It was gained 0.09%. On the other hand, JSE South Africa fell by 2.41%. The North African country now in Egypt was trading in negative territory at intraday, down 0.65%. And Kenya closed Tuesday's session in negative territory, down 1.82%. And in the Middle East, the markets are mostly positive at intraday. The Abu Dhabi was trading 0.31% up, while Dubai's index was down by 0.89%. In other regions, Saudi Arabia was in the green, 1.05% up, and while Qatari index gained 1.94% at intraday. And in Europe, there are talks about how sabotage is thought to be behind gas leaks from pipelines connecting Russia to Germany. Janelle Dumalone joins me from Berlin with more updates on this. Janelle, European officials say this looks like an act of sabotage. What else have you heard?
We have heard European Commission President Ursula von der Leyen attribute the leaks to sabotage. She also vowed the strongest possible response to the disruption of energy infrastructure. That's after scientists said they recorded undersea explosions shortly before the 3 leaks were detected on the Nord Stream 1 and 2 pipelines connecting Russia and Germany. Though there are no claims of responsibility, Poland says the explosions marked an escalation in the war on Ukraine. Sweden says they're launching a preliminary probe into whether the system was intentionally attacked. Although obviously Moscow is top of the list for possible suspects, at least from the perspective of European officials, we have also heard from Russia. For its part, Russia says it is also looking for answers, with Kremlin spokesman Dmitry Peskov saying that any version of events regarding the reason for this damage can't be discounted before the results of the official investigation. But whatever the result of any probe or any investigation shows, what this highlights is the vulnerability of European energy supply and infrastructure against the backdrop of this war in Europe. And the prospect, of course, that such escalations won't stop looms large.
We're yet to see if this is a coincidence or not, but what does this mean for European energy supplies?
It's important to keep in mind that while these pipelines were not operational, they were still full of fuel. And there, of course, is a story running alongside this one that makes it all the more worrisome. So hours after this story on pipeline damage emerged, Russian state gas giant Gazprom (PJSC) warned Ukraine's Naftogaz of possible sanctions if Naftogaz were to continue pursuing a payment dispute case at the International Court of Arbitration against Gazprom. So such sanctions would mean that Gazprom would stop transacting with Naftogaz, and that could stop the flow of Russian gas through Ukraine to Northwest Europe on the biggest remaining pipeline route. So if that gas stops flowing, the EU wouldn't even be able to have the Nord Stream routes opened as an alternative because of this alleged sabotage. It has to be said, however, that because of Moscow's strategy of trying to choke Europe by threatening its energy supply, EU has ramped up efforts to fill up its reserves by, for example, cutting consumption. According to data from European industry group Gas Infrastructure Europe, the occupancy rate of underground natural gas storage in EU countries is now past 85%. But a lot will depend on how severe the winter ends up being and how well rationing keeps the supply gap from widening.
So how have energy markets reacted?
Well, given the worry about future attacks on infrastructure and obviously Russia continuing to find ways to weaponize energy, gas prices have reflected those concerns. On this news, Dutch front month gas, which is of course the European benchmark, closed 7% higher, while British gas prices rose as much as 34% before closing 6.2% higher. This of course follows weeks where the energy market was calming down somewhat as traders and investors price the likelihood of disruptive activity coming out from Russia. This is no longer a surprise, but market watchers are obviously following these developments really closely, as there is much going on at the moment with the potential to get worse.
Thanks, Janelle, for those updates. And now we move over to the UK, where the country's bond yields have surged further, increasing government borrowing costs following the International Monetary Fund's stinging rebuke of Liz Truss' government's fiscal plan. Now, Juliana Lainka joins me from our London studio with more updates. Juliana, how are you doing today? Juliana, the UK bond yields have hit a fresh 14-year highs, and now the Bank of England is talking of intervening in the bond market with a bond program. How deep are investors, repricing financial markets?
Well, this is a significant story, and I think it's fair to say that Britain is going through an unprecedented economic crisis at epic scale. And unfortunately for the Chancellor and Liz Truss, who's only been Prime Minister for about 22 days, this is utterly humiliating for them. So much so, several senior Tory MPs, as well as a significant swathe of backbenchers, are calling on their resignation. Now, there has been a pretty serious intervention by the Bank of England today at 11 a.m. and that is that they are now buying government debt, which is the opposite of what they're supposed to do. They're supposed to be selling government bonds. They're now buying them back because, as you said, yields have shot up from a 20-year high just in a couple of days from that mini budget, £45 billion worth of tax cuts on Friday. I believe today yields hit about 5.6%, and that's because, of course, if you've got the money, you'll be buying British debt at the moment because you believe we're going to be having so much debt. The interest payment is where the issue is, and the Bank of England, Andrew Bailey, the governor, just doesn't think that Britain are going to be able to sustain paying back those interest rates without it leaking into pension funds. So this is a serious economic issue, and of course it has significant political fallout. Now, there is a statement that I've got from the Bank of England saying that the bank will temporarily purchase long-dated UK government bonds from today, 28th of September. Were dysfunction in this market to continue or worsen, there would be a material risk to UK financial stability, adding that the purchases will be carried out on whatever scale is necessary to affect this outcome. So this is a significant issue. Of course, everybody has been talking about what's happened since that mini budget on Friday. Now, I think there has to be some sort of dramatic intervention by the British government. A lot of people were asking, where is Liz Truss? We have not seen her, we have not heard from her, but considering, everything is melting as we speak, we're going to have to hear from her at least today, because there is a Tory conference beginning on Saturday, but then it's just way too far. We're waiting to hear from her any moment now.
And Juliana, so much to hear from both sides, especially with Chancellor Kwasi Kwarteng, who is due to meet with bankers later today, and reports say he is going to ask bankers not to bet against the pound. Do you think the bankers are going to buy into his proposal?
Well, he has met with them. He hasn't asked them to not bet against the pound. I think the matters are much more serious than that right now, Will. The Treasury did release a statement literally just before I stepped into the studio, so I didn't get a chance to read that. But he did meet with them yesterday. He met with leaders from insurers and banks, basically trying to calm their nerves and their anxiety, letting them know that he is in contact with the Bank of England governor on a daily bases, and that he is going to implement fiscal responsibility. And I think that is really where his sentiment is now. Before, he was kind of doubling down on the fact that, look, we cut taxes, that boosts the money in people's pay packet. They start spending, we start seeing growth. But all organisations are saying that is not true. We heard from European leaders, we've heard from the US Treasury Secretary, we've also heard from the IMF and Moody's that it's just not going to happen. So it is utterly humiliating from them, particularly because we are seeing the pound is still dipping really low. At one point it was at $1.05 today after rebounding to about $1.08. So yes, I think now everybody is waiting to see the government say that they've made a huge mistake and they are going to reverse that policy, because that is clearly the only way out of this mess.
Definitely, Juliana. I think one step at a time, and the government is going to have to retrace their steps, saying that it's not so easy, especially with this global economic, situation we are in, and the UK is not being spared from this as well. So how are other markets reacting to this? How are they doing at intraday?
Well, at intraday, the FTSE All Share is down 1.47%, FTSE 100 down 2 at 1.38%, and the FTSE 250, that domestic market, down 2 at 1.34%. In the currencies market, which is the market all eyes are on, the British pound is currently trading down on the US dollar by 0.21%. So at the moment, one British pound will buy you $1.07, although this isn't a live update, so I think it is dropped significantly lower than that. The British pound is trading down on the euro 2 by 0.06% and down on the Japanese yen by 0.33%.
Thanks, Juliana. It's always good to have you on the program. And now in Asia, Hong Kong stocks led sharp losses in markets after the S&P 500 set a new 2022 low overnight on Wall Street. The offshore and onshore Chinese yuan reached weakest levels since 2008, and the Indian rupee also marked a record low. Hong Kong's Hang Seng Index dropped 3.41% in the final hour of trade, with the Hang Seng Tech Index down 3.88%. And then in mainland China, the Shanghai Composite dropped 1.58% to lower than 3 and settled at 3,045 points. The Kospi in South Korea shed 2.45%. Japan's Nikkei 225 fell more than 1% at the session, while the Topic Index slipped 0.95% to 1,855 points. And in Australia, the S&P ASX 200 dropped 0.53% to close. Now, stock futures were made a quick rebound in the U.S. after this trading lower early and on Wednesday. Futures tied to the Dow Jones Industrial Average was up 0.22%. S&P 500 futures rose 0.03%, and the Nasdaq 100 futures fell 0.25%. Later today, investors will get an updated look at the housing markets with pending home sales from August. Meanwhile, let's get a peek into yesterday's trading activity with our correspondent, Maria Bird.
The U.S. stock market had a mixed day on Tuesday, as two of the indexes were in the negative and one was in the positive. All three indexes spent most of the day in the green, but could not hold out until the end of the day. The S&P 500 was down by 0.21%. The Dow Jones was down by 0.42%, and the heavy tech Nasdaq was slightly up at 0.24%. This is also due to the fact that many investors are concerned about the economic data reports and also the U.S. economy and reports from the Federal Reserve. This has caused the stock market to be a bit mixed on Tuesday and will likely have an impact for the days to come.
Now, after the break, Ghana's economic crisis and a possible debt restructuring, and that conversation right around the corner. Do stay with us. This is Business Incorporated. Welcome back. Ghana's long-term local and foreign currency issuer default ratings have been lowered by ratings agency Fitch from CCC to CC, or further junk status, and that's the worst rating ever. This is the second time in 2022 that it has downgraded Ghana's creditworthiness. It is also coming days after President Akufo-Addo took a swipe at ratings agencies at a UN conference for unfairly assessing and rating African countries poorly at a time the global economy was going through a difficult period. Now, to get more insights into this, we have Harrison Ahogba. He's an investment and financial analyst who joins me from Ghana. Hi, Harrison, how are you doing today?
I'm fine. How are you doing in Nigeria?
Fine. So how did the country react to this recent downgrade by Fitch? This is the second time this year.
So thank you so much, and Channels TV for the opportunity, and I trust you are doing well in Nigeria. So just like you rightly said in your intro, it's a thing of a shock to us as a country. We are still trying to understand and download the downgrade, because barely 2 months ago we were downgraded from the B+ to CC, not knowing something bad was going to happen. So the shock is still rife, both for individuals, businesses, and even the nation as a whole, especially whilst we're preparing to have a discussion with IMF. It's just like very terrible timing for the downgrade.
So the IMF, as we know, was currently in the country, in Ghana, for formal negotiations for an economic program which is necessary to forestall a debt default and also stabilize the economy in the short to medium term. Is there an increased likelihood that Ghana will pursue a debt restructuring given mounting financing stress?
So in theory, there is no better time to consider the suggestion of a debt restructuring. So basically, currently, when you look at our debt to GDP ratio, it's in excess of 75 to 80%. Considering all other things, the debt to GDP ratio is very terrible now. So what it means is that we are even concentrating on the local debt, which forms close to 40% of the total debt of the country. Now, this local debt is made up in two forms: the local currency, Ghana cedi, and some investment in the foreign currency. So in terms of restructuring, there are basically two options open to the government. Either you are going to extend maturities, or you are going to ask people to buy back or reduce their interest rate. So in terms of positioning, the timing and restructuring looks very feasible. However, would have to be guided by the economic indicators, not to cause a lot of panic, because typically what it means is that if you have an investment for a 91-day treasury bill for, say, 20%, the option that will be open to you as a customer for restructuring is, okay, would you want to extend it to 182, which is 6 months, at X amount of rate, or would you still maintain the 91 days investment, and we can reduce your interest rate from, say, 20% to like 15%. So those are the two options open to us, but it looks very likely that debt restructuring will be happening. It just reminds us of what happened in Jamaica in the early 2000s thereabout. So it's not relatively new, but it likely that is the option the government will go for.
So also the IMF says that the government's fiscal efforts to protect or preserve debt sustainability is not seen as sufficient enough, and that's why we're seeing the credit ratings downgrade by ratings agencies, and also we're seeing a flight. Non-resident investors are exiting the capital market, the debt market, and also lack of access to international capital markets. How can investors really protect themselves in Ghana?
It's a very dire situation for investors, and here if I say investors, we're looking at both individuals and businesses, and even sometimes nations. We have big corporate giants who have invested in the country expecting their dividends to be paid. Individuals, both onshore and offshore, have also invested in the country. There is that sense of anxiety, there's that sense of fear, there is that sense of the fact that barely 5 years ago in 2017, when the banking sector was cleaned up in Ghana, so questions are being asked, what is going to happen to our funds, ultimately driving a perception for a panic withdrawal. Now we have to manage this relationship very well from the regulator point, and then from the financial services providers, and then from the individual. So as a customer or as an individual, you'd want to watch keenly, because if you go withdraw your money now, what is the opportunity cost? If you are thinking of investing, which is not the ideal situation, in foreign currency, i.e. dollar, pound, and euro, they are not even on the market for you to have access to. So investors have the option of watch and play, looking at it. So if it causes a panic withdrawal psychologically, but we believe with time we should be able to adjust, especially if we hear the feedback from the IMF, which is works so hard to streamline the economic stability based on the debt management officers and whatever solution that they'll bring to us.
Thanks so much, Harrison Ahogba, investment and financial analyst in Ghana, for joining us today and sharing your thoughts on the situation, economic situation in Ghana. Thank you so much.
Thank you so much.
And now in Zimbabwe, business activity, which has the world's third largest known platinum reserves, was brought to a halt due to a nationwide blackout. According to a statement by the Zimbabwe Electricity Transmission and Distribution Company, the electricity cuts were caused by a disturbance on a high voltage transmission line, which engineers resolved later on Tuesday. Meanwhile, ZESA, the state-owned energy holding company, will meet miners on Wednesday to discuss the blackout, as they were not spared by the blackouts. The southern African country, which has an installed capacity of 2,100 megawatts, was producing 1,029 megawatts on Tuesday against a peak demand of 1,400 megawatts, and that's according to ZESA Unit Zimbabwe Power Company. And now to Botswana, where the country has resumed exports of live cattle and beef from areas declared free of foot and mouth disease, that's the FMD. But sales to Europe, which has tougher import restrictions, remain suspended. Now, apart from the EU, Botswana exports beef and live cattle to Zambia, Zimbabwe, Namibia, and South Africa, which is also affected by sporadic outbreaks of foot and mouth disease. In August, Botswana was suspended the beef exports following an outbreak of foot and mouth disease in one of its disease control zones in the northeast of southern African country. And that's it on Business Incorporated. I'm Will Libang. Thanks for watching. See you next time.